Okay, Greg? Yeah, we will never get into disclosing. We file reports every 90 days that show what Berkshire does in marketable securities, but we don't identify. I may identify whether it's mine or theirs, but we don't get into identifying what they do individually.
Looking at Berkshire's finance and financial products segment, there was a fairly significant increase in the amount of cash carried on the group's books last year. After holding steady between $2 and $2.5 billion during 2012 through 2014, the amount of cash held at the segment spiked up to $5.4 billion at the end of the third quarter of last year and $7.1 billion at the end of 2015. This incidentally coincided with your acquisition of GE's railcar leasing unit, as well as the acquisition of several railcar repair and maintenance facilities. Sales and profitability were fairly solid last year, but don't really seem to account for the magnitude of the change in cash. And investments, debt, and other liabilities do not look to have changed significantly enough to account for the difference, perhaps accounting for about $1 billion of the increase. Just wondering where the additional $3.5 billion in cash came from, and whether or not the elevated level of cash at the end of last year is excess to the business or a new required level of cash for the operations.
Yeah. Well, I can't tell you where it came from. You'd think I would, $3.5 billion, but I can tell you why we were funneling money into the parent company and into the finance company. That money was basically dedicated to making the $22 billion portion of the precision cash parts purchase that was accounted for by cash. We actually borrowed $12 billion, but $10 billion was what was of the borrowing was there. And we pushed money from various sources, depending on who owned what and that sort of thing. We pushed money into those two entities and eventually into the parent company to take care of the $22 billion that was coming due. Turned out to be at the end of January when the precision cash parts closed. There's really no significance to it other than that. Okay, station 7.
Good afternoon, Mr. Buffett and Mr. Munger. My name is Step from Cranford, New Jersey. I just have a simple question for you. How would you explain IBM's moat?
I'm not sure that's a simple question.
No, I don't either.
Well, it has certain strengths and certain weaknesses, and I don't think we want to get into giving an investment analysis of any of the portfolio companies that we own. I think I'd probably better leave it there. Charlie?
Yeah, it's obviously coping with a considerable change in the computing world, and it's attempting something that's big and interesting, and God knows whether it's going to work modestly or very well.
Yeah.
I don't think Warren knows either.
No, we'll find out whether the strengths are strengths.
Yeah. But it's a field that a lot of intelligent people are trying to get big in.